Welcome to the Boom and Crash Liquidity Concepts, everybody. Capital trading team here. We are excited. We are so honored that you have taken your time and you are watching this series. This is going to be an exciting series. There's a series of 7 episodes, including this introductory video, right? So before we continue, we are so excited to celebrate your guys' interaction on the previous series, the Boom and Crash Capitalizer. It has been wild, it has been crazy great. So we want to take this time and just go through the stats and just show you how much we've grown ever since we launched BCC about 4 months ago. So let's just go through it and see how we've been performing. So yeah, that's capital trading. So as you can see, the stats, we went to 955 subscribers with 19 videos, and this was crazy wild. And this was our top video with 1K views, just 19 videos, and that includes the shorts, the videos, right? So we appreciate that. This is love, y'all. Just look at the stats. Look at the number of views. This is so amazing. 5K views, everybody. Thank you. 5.335 views. And continuously share the channel. Please remember to share the channel. Okay, back to the Boom and Crash Liquidity Concepts. I have an outline here. But before we go through this outline, you need to understand something about the series. It's a more practical series, which means it's less wordy and more chatty. I don't know if that makes sense. And we are going to cover examples from all the Boom and Crash instruments, including Boom 300, Boom 500, and Boom 1000, Crash 300, 500, and 1000 in that manner, just to demonstrate that whatever I'll be showing you on this series, it's applicable on all these instruments, right? We just want to demonstrate, why liquidity, you need to have liquidity as a trader. You need to identify liquidity as a trader so that you don't become the liquidity. But let me not get more into that because we're going to get to that. So we're going to cover the definition of liquidity, right? We're going to identify the importance, significance of liquidity. We're going to go through a concept that we introduced, outlook twist. It's a more psychological concept. We're going to identify liquidity in boom and crash indices, right? So liquidity exists in every trading instrument, but our focus in this series is going to be only for boom and crash. And we're going to identify types of those liquidities. We have 6 of them: top trendline liquidity, bottom trendline liquidity, equal and lows liquidity, consolidation, highs and lows liquidity, right? So this is not a new concept. Remember, if you go through our social medias, especially our Instagram and our Facebook, you'll realize that we did touch on these topics, right? So this was just to put it in a video format. We did teach about liquidity, but now we want to put it in a practical and more chatty format. So let's jump into the first item on our list. When you talk about liquidity, this is how we define liquidity. This definition, we did introduce it 4 months ago in the Boom and Crash Capitalizer series. So this is nothing new. We did describe liquidity as liquidity pertains to an index's ability to be bought and sold without causing a significant change in its exchange rate. And we did identify liquidity, 2 types of liquidity. We identified internal range liquidity and external range liquidity. And we talk about a range. If you want to learn about a range, we identified the range, trading range, on episode 4 of the Boom and Crash Capitalizer. So when we talk about internal range liquidity, these are points of interest for the market within the range. And if we talk about external range, these are points of interest for the market outside an identified range, right? Just to add more, market liquidity refers to an extent to which a market, such as a country stock or a city's real estate market, allows assets to be bought and sold at a stable and transparent prices. When the spread between the bid and the ask prices tightens, the market is more liquid, right? And when it grows, the market tends to be less liquid or more illiquid. When a stock has a high volume, it means there has been a large number of buyers and sellers in the market, which makes it easier for investors to buy or sell the stock without significantly affecting its price. And then, on the other hand, low volume stock may be harder to sell as there may be fewer market participants and therefore less liquid, right? But this was just a general overview perspective of how the world views market, and this is not specific to special types of synthetic indices. Remember, boom and crash, these are synthetic indices that are algorithmically made of numbers, right? So from these two definitions of internal range and external range liquidity, we talked about points of interest. And when we talk about points of interest, we did go through those in the last YouTube video or the last episode of the Boom and Crash Capitalizer series, which was episode 4, where we utilized old highs, lows, consolidating trending markets, price action tools as our POL or points of liquidity. Now, just to demonstrate this, I'm just going to take you through how the Boom and Crash Capitalizer series was structured. So the first thing you do now is you go to YouTube, search Capital Trading with an S, and then the first one with the logo, 955 subscribers, maybe more, and just go to playlists and click on 2023 Boom and Crash Capitalizer 1, because we intend to have 2, but we'll announce when you're going to have it. And then it's a 4-episode series, and just go through. I'm just demonstrating some of the stuff we covered there. We did cover on the price action tools. Most of these price action tools, they're going to demonstrate our points of liquidity, right? And we're going to touch on that. So just check it out, everybody. It's a 4-episode series. It's so helpful, yo. It's so helpful because, bruh, we did the most. Just check it out. There's 4 episodes, and then just go to episode 4 for the most. And then remember, I mentioned trading range. So just go watch this episode before watching this, because, bruh, we did touch on liquidity before, but not as much as we're going to do in this series, right? Check it out, because it's gonna be helpful in your journey. Thank you. Now let's jump back. Now let's identify our types of liquidity. Before we identify, we did touch on liquidity on our Instagram at Capital Trading BW. Check it out and just scroll to the downside. During the inception year months of our page, we did identify liquidity. But what we're trying to do now is we're trying to bring it in a more practical approach, just to prove that this theory works, right? So when you talk about top trend line liquidity, right, we are just saying there resides liquidity above trendline phantoms. And then when you talk about bottom trendline liquidity, there resides liquidity below trendline phantom theories. We are not disregarding any trading strategy here. We're just showing you, and we are going to demonstrate to you how the market tends to run through or run over trend lines. So when we talk about trend line liquidities also, we're just gonna demonstrate why it's not reliable. Trend lines are not reliable when trading boom and crash, right? We are also going to look into equal highs and equal lows as our liquidity. So on the highs, price run over equal highs to reach for liquidity. Same for the lows. They run them over to reach for liquidity. So we are going to demonstrate why classic support and resistance does not work on a consistent basis. Yo, don't tear me apart yet, because I'm just going to prove that. What's a better way of saying something and proving it? That's a win case for me. So that's what's going to happen. And then the last two types of liquidity, we're going to look at consolidation lows and consolidation highs liquidity. So the market tends to consolidate as means of building liquidity below the lows and means of building liquidity above the highs. So yeah, same thing. We will demonstrate why the markets tend to consolidate and how to stay away from such an environment, right? So that's how our series is going to be divided into. How it's going to be each next video now will be divided into this type of liquidity. So what that means is our next episode will be looking at the top trend line liquidity. Thank you for watching, everybody. See you on the next episode.